JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 10th of February 2022. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which if you go click here on the top, yep, it'll take you to our page, which is updated on a daily basis. So I believe you can find it useful. Now, jumping into the charts, guys. So the first one I want to quickly pick up on Nikkei 225. So yep, we had a nice good push higher. However, by the end of the trading session, we kind of started drifting lower. That said, we kind of still managed to remain in positive territory, and we managed to stay above that 27,594 zone. And above that 21-day EMA. So I talked a lot about this, and we finally got our push, we got our breakout. So yeah, now I mean it looks a little bit more positive. As long as the index, I would say, stays above that 21-day EMA, we'll continue aiming higher, but not for long. Initially, we're just going to aim for that 200-day EMA because we want to see how it's going to react around here. And then after that, of course, slowly we'll go from there. Because if it does want to push higher, then yes, if it overcomes the 200-day EMA, that's great. We could see a further move north. However, again, we of course will take everything with a pinch of salt. I mean, although yeah, we are seeing the markets kind of pushing a little bit higher on some. It is clearly seen that, you know, it might be just part of a temporary correction before another possible leg of selling. But again, let's not, you know, overcomplicate our life. For now, the only thing is what we can do is going to go from a little bit of a shorter term perspective, but keep that in mind that, you know, it might change very quickly, because again, we are right now in the world of of central banks raising interest rates, at least starting to raise interest rates. So that's not very good for the equity world, so be very careful on that. So, and of course, keep your eyes on the headlines surrounding the interest rate decisions. Now, oh, I can see in the chat room here, Evu, yep, good morning to you too. I hope you're having a wonderful start of the day, and I hope everybody else who is joining in right now having a wonderful start of the day as well. So yeah, guys, jumping into Hong Kong's Hang Seng Index. Excuse me for my voice. Just bear with me one moment. Sorry about that, guys. I had to clear up my throat a little bit. Now, Hong Kong's Hang Seng Index, yes, it is quite interesting. It's still trading, it's still running. We still have around, what, something like 55 minutes left of trading in this one. It's quite interesting to see, will we actually end up being in positive territory? Because on one hand, we managed to push above the highest point of January today, so that's at 24,982. We managed to clear that one. We managed to pop above it, but then we kind of quickly drifted back down. So if we're looking for something a little bit more reassuring for the upside, then of course we would like to see the index kind of staying and trading above that highest point of January. If we get that, then yep, we'll get a little bit more comfortable with the upside in the near term, because again, don't forget that we're still trading below this downside line, this long-term, I can actually still probably a medium-term downside resistance line, tentative of course, but nevertheless a downside line taken from the high of the 18th of February of 21, the year 21. So yeah, again, like I said, from the near-term perspective, we could still see this one drifting higher. However, we would be very careful. This is exactly we would be careful near this downside line. This is exactly what I was talking about just a few minutes ago. Now, long story short, with Hong Kong Seng Seng, if we do continue to trade above this hurdle, above the 24,982 zone, or even better, above the 25,000 mark, then yes, we will continue aiming higher. At this point, I mean, yes, we could still move higher. Maybe, it could be a bit of a curve here. I mean, we could drift lower, maybe test the 21-day EMA and then rebound again. However, I'm not really comfortable with that, so I would prefer to, if it does drift a little bit lower, okay, that's fine. I mean, this is one of those moments, where you just have to kind of sit it out, because it's a really unclear. It could drift lower. For example, if it drops below the current lowest point of today, near the 24,650 zone, and at the same time it also breaks the 100-day EMA here, shown as the green line, then yes, we could see maybe this one drifting a little bit more to the downside here. However, at the moment, guys, I mean, we are trading above these two EMAs, so let's see if we can climb back above that 25,000 mark. If we can, then yes, I'll go for some higher levels. The German index, DAX. So looking at this picture, we can see that yesterday we had a good push higher, and this is when I said to you guys that wait for that confirmation break. Now, what I was talking about in the beginning of this week, I said that, look, I mean, we could be seeing this one as a possible range, or on the other hand, we also could be seeing this as a double top, or even a head and shoulders pattern with the neckline being here. But if we want to consider that, we need that confirmation break, and in this situation, through the neckline, the so-called neckline, which is kind of approximately around the 15,000 mark. So what did we get? We get a reversal. We get a push back above this downside line taken from the high of the 5th of January. So we didn't get that break through the neckline. So this is one of those moments, guys, when you always need to wait for that break. And exactly like I said, this is one of those. But anyway, for now, I'm not saying that I'm becoming very, very bullish. For me to become a little bit more bullish would be on a break of this 15,728 zone right here, because then we would be kind of in above the midpoint, approximately above the midpoint of this whole range, and then yes, we could maybe see this one traveling a little bit further north. This whole area is quite interesting as well for the buyers. However, we do have some obstacles on the way higher, like for example this one, the first one, the 15,537, and I talked about this one, and I said that if we break this downside line, my next target is around here. But where a little holdup could occur, and at the moment we're kind of stuck here. The cash index is trading at around 15,523 zone, so not far from here. So we kind of already, I would say, we're getting there, and if we clear this level, if we jump above the 21-day EMA as well, then of course I'll aim for that 100-day EMA. I'll keep an eye on this one, and yeah, then after that, slowly I'll start, grinding higher and targeting this 15,728 zone, approximately around here, and yeah, and then we'll of course take it from there. But for now, guys, long story short, leaning a little bit more towards the upside, but very, very carefully, because again, like I said, we do have these obstacles around here. Now, in terms of the downside, now if this somehow falls back below the 200-day EMA here, yes, we could start maybe considering a bit of a decline. However, as I mentioned before, I don't really like these areas right here. such areas when we are, let's say, in a somewhat of a triangle pattern or something like that. So I rather wait those out and just kind of, be a little get a little bit more comfortable with my own levels. So yes, we could start considering maybe a bit of a drop lower if we fall below the 200-day EMA. But again, let's say it could drift lower, but then let's say, for example, if it somehow finds support somewhere around here, that could be, like a little bit annoying, or maybe it could drift a little bit closer to this upside line, but find support a little bit higher and then reverse again. So we have seen these scenarios before, and that's why I try to stay away from like any any of these, and I would just rather, like I said, rather stick to my levels, which I'm a little bit more comfortable with, and just and wait out. If it's not there, then I'm just waiting it out. Nasdaq 100 very quickly on that one. So good push higher, pushed above this 14,856 level. Everything's looking quite great here for the buyers, and yeah, now we're kind of looking at the at this 15,000 mark, of course, which we managed to overcome. The cash index is still trading above it, so that's good. Now, in a way, how to play out this idea today, maybe, I would say, even if we do retrace a little bit lower, keep your eyes on the 21-day EMA to the 200-day EMA here, shown as the yellow and the black lines respectively. If we remain above those, then maybe a bit of a retracement here. I mean, this retracement could be classed as a temporary correction, and then another push higher could be possible. From the very short-term perspective, keep your eyes, of course, on yesterday's high near the 15,058 zone. If we pop above that, then my next target is the current highest point of February near the 15,196 level. And if that gets clear, then slowly we'll continue grinding higher. I do still have this area as highlighted one, this one right here, this 15,357 zone. And yeah, if we do jump above it, and we could also jump above the 100-day EMA, and potentially even more buyers could join in, because at the same time we would be placed above all of the EMAs, and yeah, that could be seen as a positive. However, at this point, very careful, because all this area, although it seems yeah, quite interesting, quite attractive for the buyers, be very careful. We do have obstacles on the way higher, so yeah, just let's not overtrade here. Let's try to take it carefully and accurately and cautiously. So yeah, at the moment, guys, like I said, looking at maybe if we get a bit of a retracement here, I'll keep an eye on the 21-day EMA. If it provides support, then maybe a rebound could be possible. But here, if you want, you can look at the high of yesterday near the 15,058 zone. A nice good pop above it would confirm a forthcoming higher high and could open the door towards the highest point of February, and then we'll so on and so on, of course. For the downside, to be honest, pretty straightforward. I need to see a drop below this highlighted territory right here, roughly around that 14,471 zone, in order to go for some lower levels. Now jumping into S&P 500. So this one's a little bit more on the positive side, more positive than Nasdaq. Yeah. Here I would say it's pretty straightforward. I need to see a nice good push above this 4,595 level in order to get a little bit more comfortable with with the upside. So a nice good pop above this area would confirm a forthcoming higher high, and slowly we could start aiming for some higher levels. At the moment, the cash index is trading below the or actually I would say around the 4,580 zone. Not something critical, but maybe also, like I said, maybe a bit of a retracement here could be possible, maybe towards this 100-day EMA. The situation with the S&P is a little bit more positive, just because, like I said, it broke the downside line. It is currently trading above all of its EMAs on the daily chart, and and it's also very clear, it's very close to this highest point of February, which can get broken easily. So keep your eyes on all that. In general, like yesterday, if you look at the market, the U.S. market, yes, the majority performed well. I think, let me just quickly double check my other resources here. Yeah, I think all sectors were in positive territory, despite having seeing some of these some big companies kind of closing in the red, but overall all sectors were in positive territory. The biggest gainers were technology, communication services, and real estate. So the least performing sector was consumer defensive, but yeah, that's all fine. I mean, technology, yes, yesterday, if you were trading technology stocks, congratulations. Like companies like Nvidia, for example, yep, good performance from them. Nice little rebound here. So yeah, everything is looking quite interesting. Let's see how today's day is going to go ahead. But like I said, we are very kind of we are at interesting levels right now, and we are like I said, especially on the Nasdaq and the S&P and Dow Jones, of course. We need that confirmation break. I mean, although it looks a little bit more, positive than negative, but still that confirmation break is required. DXY, very quickly on this one, I'm not going to spend too much time on this, but because the same analysis remains valid, guys, I mean, I talked throughout this whole week about DXY and about that 23.6% retracement on the Fibonacci, which is still kind of acting as a strong area of resistance. So for now, in order for me to go lower, I need to break below this 95.14 zone. For the upside, I would like to see a drop below, a push above the this 95.14 level right here. Excuse me, and 90, actually, sorry, not 95, 95.14, that's for the downside. For the upside, it's roughly around that 95.68, something like that, and then we could go for some higher levels, but again, we do have a bunch of obstacles here on the way higher, so, it wouldn't be maybe a huge jump here. Now, gold, so mission accomplished, this area has been reached, perfect. This is what I talked about from the beginning of this week. I said that if we push above this barrier, above this 1811, then my next target is the area around that 1830 zone, approximately around here. And well, as you can see, we managed to reach that. So great news. Can we go further north? Well, for now, I would say as long as we stay above the 1830 territory zone, then yes, I'll continue aiming higher. If we somehow fall back below it, then maybe a bit of a retracement here could be possible towards that 21-day EMA. US oil, which is WTI oil. Okay, now that's quite interesting. So yesterday we broke the upside line, and we kind of, I wouldn't say we stayed above it, or just maybe like just fractionally, depending on how you're going to draw your line here, but to be honest, still the weakness kicked in, and yep, maybe that's why the kind of some of the energy companies performed not very well. Here, for example, we have an example here of ExxonMobil. But yeah, I mean, we're going to keep an eye on this hurdle here. I talked about this area, this 88.82, roughly around there. If we drop below this, then my next target is the 21-day EMA, and then we'll take it from there. This 86.38 level, that's what I'm keeping an eye on. I think that's the let me just double check something here. Actually, I think it would be better just to monitor the lowest point of February. There we go, the 80 at 86.58. So there we go. That's the current lowest point of February. It also coincides with the 21-day EMA. So in other words, everything's looking quite interesting here. So it's interesting for the sellers, or should I say could look interesting for the sellers. However, guys, as I said before, wait for that confirmation break, because again, it's sometimes with oil it's also a bit unpredictable, because it could, for example, find support somewhere near this hurdle and then rebound and push higher, and maybe form initially form somewhat of a double top, and then maybe we'll see if it actually reverses and drifts back down. But again, too early for that. For now, I'm just kind of, like I said, keeping an eye on this, keeping an eye on this hurdle. If we do break below it and stay below it, my next target is the 21-day EMA near the 86.58 level, which is the current lowest point of February. Ethereum. So good result here. Tested the 3,272 level. I talked about this, and now we're seeing a bit of a retracement, which is quite normal, to be honest. Everything's in line. Everything's nice and good here. So maybe, like I said, maybe we could see maybe a bit of a retracement here. So let's see if that happens. If that happens, then well, that's that's going to be very, very technical in that case. So basically, I would say like this: that is, if the pair continues to as long as the pair, the pair, because it is a ATH against the USD. So if this pair continues to trade below this hurdle, below that 3,272 level, yes, I'm going to consider maybe a bit of a larger correction to the downside here towards that 21-day EMA, towards that upside support line. If it provides a good hold up, a rebound here could be possible, and maybe then we could go for some further upside. If you are a little bit on the careful side, then you probably can just wait for a break of this highlighted territory and then go for some higher levels. Jumping into a few pairs very quickly, AUD/CHF, guys. So we had a nice push above this downside line. We're now getting closer to that 100-day EMA. That's my next target, but to be honest, my preferred target is the area around that 0.6675 level right here, which you guys can see acted as a fantastic area of resistance from around around like mid-December. It has been acting as a strong area of resistance. So yeah, if we do move higher here, that's going to be my next target, and then of course we'll take it from there. Maybe the third test will be a lucky one here for the bulls, and we could see a nice break here and a push higher. AUD/JPY so continues to move higher. So as you remember, I talked about this downside line initially, which we managed to break, and now we're seeing a further move north. We managed to clear this 82.97 zone, and we managed to reach that 83 level. So I would say as long as we stay here above this area, then my next target is the 83.75, and so on and so on. If you want to kind of monitor this as well from the very short-term perspective, this upside support line. So this could be a good indicator, and to see when could we maybe, let's say, start looking at some lower levels. For now, like I said, as long as it maybe stays above this hurdle or even this upside line, take it from the low of the 28th of January, I'll continue aiming higher. USD/JPY quick update. So still struggling, and we're still struggling with this 115.68 zone. So that's very important to watch here. If we do eventually break that, then yes, we'll go for some higher levels. For now, I'm just observing the price action here, guys, and I'm just keeping an eye on it, because I said that all this area for me is somewhat of a neutral one here. Although, maybe we could be leaning a little bit more towards the upside, but as long as it stays in here above this downside line but below this barrier, I will just kind of continue observing this one. I need to see that pop above this area, and then I could go for some higher levels. USD CAD now. Well, talk about choppiness here. So, okay, first of all, very quickly, from the very, very short-term perspective, from just kind of this week only, maybe, just maybe, this could be forming a possible bearish flag. Now, if it is the case, then, well, yes, we could see a move lower. However, as I mentioned before, I need to see a drop below that 1.2650 zone in order to get a little bit more comfortable with the downside. And another thing here to mention, if we do drop below this area and we move lower, then, well, maybe actually we're considering a move higher here from oil. So that's something to keep in mind for you. And that's what I said, that wait for it, wait for that confirmation break, because again, if you know, if USD CAD will start, you know, moving first to the downside, then yes, we could see oil maybe pushing a little bit further, maybe pushing a little bit, you know, a little bit back to the upside here, I would say like this. So now jumping into US dollar against the South African rand, something that I have, you know, I do like to look at sometimes, but not always. However, they are sometimes very technical, and well, let me start off. This is a fresh chart here. So one thing I want to mention is this upside support line, roughly around here, and probably roughly around here. So something like this. It's a I would say maybe not an ideal one, but still something to keep in mind. On the other hand, we do have a bunch of other downside lines right here. One of which could be this one, taken from the high of the 26th of November. So yeah, at the moment we're resting on the 200-day EMA. If we can clear that, we can also probably clear this upside line taken from the low, the 7th of June 2021. And if that's the case, guys, I mean, then yeah, we could see a further move lower. Now, initially, the first obstacle would be on the way lower, could be this one, the lowest point of January, near the 15,006 territory, somewhere around here. But if that gets cleared, and slowly we'll start, you know, drifting to the downside, guys. But again, I just wanted to point this one out because we are at a very interesting spot here on USD, US dollar against the South African rand. So yep, keep your eyes on that one. So let's see which way this is going to break. For the upside, I need to see this one pushing back above all of the EMAs here, and then yeah, we could go maybe for a bit of an upside. GBP NZD, quick update. I talked a lot about this already, so finally, yeah, we've got a break. We got a break of this upside line, and I kept on talking about this, guys, and I said that wait for it, and look at this as well. We dropped below that 2.0270 zone right here. I think that's the case. Yep, that's the one. We drifted lower. Today we corrected back up, and this area here did provide strong resistance. Now, let me just check, remind everybody what this level was, and this level is the highest point of August of 2020, guys. So we're now sitting below it, and we're just oscillating around that 21-day EMA. So if we continue to trade below that highest point of August of 2020, yep, I'll continue aiming lower. Euro GBP, guys, very quickly on this one before I run out of time, because this is something that I don't look at very often, but again, sometimes I do kind of, you know, do like to kind of, you know, pick up on this one, because, you know, sometimes it does something interesting. For example, here we were trading lower. Previously, when I talked about this one, we were still trading below this downside line. I said that in order to go for lower levels, we need to see a nice good drop, and we would need to see the pair staying below this 0.8305 zone, somewhere around here. We got a drop, we had a false breakout, and instead of that, yeah, we had a reversal and pushed higher and, and broke the 0.8360 level. I talked about this as well, and there we go. Boom, we had a nice push higher. What we're seeing right now is a possible bullish pennant here. As you can see, we have our little pole, and we're having this little consolidation here. So yeah, if we do pop above the 0.8478 zone, that's where I'm going to get a little bit more comfortable with the upside. For now, I'm keeping an eye on this one. Yes, I'm kind of sticking to the idea that maybe it could be a possible bullish pennant. Will that be the case? Well, if we do get a pop above the 0.8478 zone, that might just prove the idea. So yeah, and finally EURUSD, guys, very quickly on this. So yeah, still that 23.6% retracement on the Fibonacci is providing a good support. So, but that doesn't mean anything, because, oh, sorry, that does mean a lot, but what I wanted to say is that still, for me, I prefer to, you know, to wait for a pop above that 1.1483 level, just to be a little bit more on the safe side, because a nice pop above this area would confirm a forthcoming higher high, and we could go for some higher levels. Right now, yes, the fact that it's still, you know, holding above this 23.6, that's on the Fibonacci, that's okay, that's great. You know, the bulls are probably enjoying this moment. However, if it starts falling below this hurdle, we might see a bit of a retracement here towards that 21-day EMA, maybe towards that 38.2% retracement on the Fibonacci, and then we'll have to just take it from there, guys. But for now, I'm going to go a little bit higher if we do pop above that 1.1483 level. So, guys, that's it for this session. I really hope you found it useful, and thank you very much for joining in and watching this one till the end. I really appreciate that. So yeah, guys, if you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a wonderful trading day, stay safe, and I'll see you later. Bye-bye.